23rd June. So last day of week, Friday. Okay. So Nifty formed today bear channel. Okay. So we can't say trendy market, but overall range is good. Okay. So good swing trades are there. Okay. We will discuss. Okay. So here is the flow of the video. Okay. So we will go for weekly, daily approach time frame. Then we will discuss general view where we see good looking swing trades. Then we go for tick by tick or bar by bar analysis. Then one way of trade in all day structure where we are finding two patterns. Okay, so the first is wedge pattern and another is midday approach. So we are finding same entry or same type of structure in all types of day structure. So today is the bear channel day. So we are also discuss how to trade these two approach. Okay. Then we also see some similar patterns, similar structures. Okay. Let's go for daily approach. Okay. So week bar is inside bar. Okay. We closed between last bar. Okay. So if you see today's chart, so consecutive second bear bar. So this is the part of bull channel. So we have also seen these three consecutive bear bars, these 2 hours, these 2 hours. Okay. So it's also sign for negativity, and also we are testing for EMA. Okay. So today we tested the low of the week. We not given breakout below it. This is the current week low. Okay. In hourly time frame, if you see, so if you consider this bull channel, okay, so we broke below it. We saw two bull bar, so which is the inside bar. First bar, which is the bear bar. Okay. Fourth bar, which tried to break above uh, high of the day, but not able to and faded by sellers. Yesterday we seen bear breakout below EMA. Okay. So this is the part of first leg. Okay. Pullback for little pullback, which breaks this micro channel or consecutive bear bars. Then again broke this first leg, and we even chances are that if not good looking bull bar we see, so even we break below it. Okay. Let's go for general review. Okay. So today is the bear channel day. So very at the starting of the day, we see that bears are active. Okay, so they go for measured move, which is here. Then reversed from bottom. So this is the good looking bull bar. So it shows bull channel, or even we see upside movement in day. Okay. So good swings are first hour. If we continue to fall, if you traded first candle buy or sell, so it is the good trade. Then also opening reversal trade, which is this bull bar and this bull bar after this exhausted sellers move. So it is also good swing trade day. This is the sort of wedge pattern. So we see first leg here, then we go for pullback. Pullback also have two leg. So this is first leg, this is L2. Again buy above this bull bar, which is also good swing trade day. So if you also consider measured move, so put here This is the midpoint, and this is the measured move target. Uh, in this buy channel, bull channel, so there are two legs, H1 here, H2 H2 is here. Then we saw some at 1 o'clock we saw breakout below EMA, price not able to go above EMA, so it converts always in position to short position. So if you not traded this after confirming here this breakout bar, so you can trade it for always in position short. Here is the H2 opportunity. Okay, so let's go for further bar by bar analysis. Okay, yesterday we seen bear channel. So where at starting hours we seen bear bars faded by bears. Then we see some measured move for buyers. So it is also considered as a faded move. And then at the exhausted mode, again sellers took entry. So this sellers move resumption we seen it here. Okay. If you consider yesterday's move, so also it gives measured move from opening to low. So who are sellers? Yesterday's sellers. So they are in measured move target. Measured move is uh, when you and all we consider as a, if we are tracking trade, so we at least have measured move target minimum. So let's consider it as a first candle if we are sold below first candle. Okay, so this is the our risk. So at least we get 1:1 ratio. Okay, so if you notice that if you are selling somewhere here, so this is the measured move target where we get this risk equal to reward. Okay, so at the starting hours we are going for two methods. One is opening reversal method and another is first bar buy sell close. Okay, we will discuss both case. Let's consider first candle, which is the bear bar. So if we consider as a selling this bear bar, so our target is to go for measured move, at least measured move. So these 4 or 3 consecutive bars achieved measured move target. Okay, in starting hours we are trading two approach. So this is the first case where we are buying and selling at first bar. Okay. If we consider yesterday's scenario, then we also shown that this is the bear bar. Okay, this is bear bar. If we are selling at here, so then we, after seeing these two consecutive bull bars, we go approach for scaling. Okay, in scaling approach, any next bear bar we are selling again, scaling again, and somewhere around here or around here we are taking profits. This position will be exited at break even, and position entered here which is in profit. Okay, so if you still in hold, this is the deep pullback yesterday's scenario. So noticing point is here is that this is not strong bull move. So chances are that after second leg, this is the first leg, after second leg this sellers will fade it. Okay, so this is the second leg and sellers faded it. So anyone who even sold a ninth candle, they are scaling here for good bear channel or bear two leg approach. Okay, so first bear bar selling on close, second bear bar also sell on close. Go for measured move. Move your SL to breakouts bar, good looking breakouts bar, which is the 2. Put your SL here, go enter here. third bar bear bar, fourth bar inside bar. Still always in position is go for short. Always in means any candle can be sold here, and if we manage well, then we can achieve target. Okay, so fifth bar, which is the tried to go upside but ended in big red candle. So I also consider as a exhausted move. If it not get good follow through, then it will return. Okay, buyers will fade it. So here this candle uh, go target for measured move. So I sold somewhere here first bar, booked profit in this candle. Okay, after seeing sixth bar, uh, one reversal trade. Okay, so second approach is for reversal, opening reversal trade, so which is to be traded here. Sixth bar, put your order above this or wait for to the bull bar. If you see same scenario, fourth candle, if you put order here, so then your order will be traded somewhere here. After seeing bear bar, closing bear bar, so you will be disappointed. Okay, so if you traded as well fourth bar, which is the reversal bar, so what you do after seeing eighth bar, you go scaling or just move your SL to here or below breakout bar. So sixth bar, not good follow through for this fifth bar, which is sign that this is the exhausted move. Very next bar, seventh bull bar, buying on it, selling on, closing on its high. So consider as a reversal bar. So if fresh bars are there, also trade it here. If you trade a fourth bar, scale in here, move your SL to here. 8 is bull bar, follow through for seventh bar. So here we see two consecutive bull bar. 9 bar is sort of two-sided move. Okay, so sellers are active here. So 10th and 11th, these are three consecutive sellers bar, but 9 and 10 are not good looking bear bar. So we consider only as a one follow through, which is the 11th candle bear bar. So it is also faded by buyers. So if someone buying on 8th candle bull bar, after disappointing these three candles, they again going at 12th bull bar, which is the reversal bar. Okay, I entered on 7th candle close after seeing a good follow through and these three sidebars. So I decided to go again at 12th bar, scale in, move your stay put your SL to here. 14th, 15th, 16th, 17th, these are the micro channel bull bar, 5 consecutive bars which took prices or breakout to the EMA. 17th bar, which is the bear bar. So if you are participated in this buying channel, you have bought anywhere here, so you just exit at 17th bar. Still always in position is on long side. So exiting here and enter after any good looking bull bar. Okay, it is the right approach. Okay, so if you see after this is the considered as a outside bar, which is the bear bar, closing on its low, also pull back to the below EMA. So if you see very next bar, which is the good looking bull bar, somewhere closing around here, so you trade it. Okay, again go for long, but here you see that there is 3-4 consecutive bear bars are there. So after seeing this price action, what you conclude is that buyers and sellers both are active. First move sellers faded by buyers, so again sellers will try to fade it. Okay, they got consecutive bars, 4 consecutive bars. Okay, now it's also considered as a flag pattern. Okay, this is the first leg. If sellers show some rejected here, so buyer will try to catch and own this move. Okay, here we shown 21 bull bar, which is tried to faded it. Okay, not got followed through. 22 bar, which is the faded by again sellers. Okay, 23rd bar consecutive tried to go consecutive bear bar, but closing on its high. So it's shown size that this bear move is not very strong, or it will end somewhere here. Okay, if we consider first leg of it, okay, so after retesting or even second leg, we go for long again. So this is the H1, this is the H2. So we go for target of the H2, target of breakout above EMA, target of highs of the day. Okay, there is another point to discuss is here. Many traders or many automatic trading will put uh, order somewhere here, testing of their EMA. Okay, so if they put order here, or if anyone who bought here, so after seeing these consecutive bars, it will be disappointing price action. Okay, now interesting thing is here, after seeing this bull bar, or even anyone traded somewhere here, always in position is still upside. Okay, after seeing this move, you have decided that always in position is upside. So what you do, you wait for any bull bar, which is the 21 bar, buy on its close. Okay, so 23rd bar, 24th bar is also good looking bull bar. So anyone who not entered here, go enter here. 24 bar, which is also bull breakout bar. So anyone who's not traded here uh, can create also fresh position here. Okay, so this is the H1, L1, this is the L2 bear bar. Tried to break below this move, but faded by bars. So this is the L1 and this is the L2. Okay, so 28 bull bar, scaling, buy on its close. 30, 31, 32 up to 35. This is the micro channel which go at least above first leg. Okay, so anyone who are in position now exit at 36 candle. What he will do, he will again enter after any good looking bull bar. If he decided to enter at 38, put your SL2 below it because price will not go. If you see, price even not gone one tick below EMA. Okay, if you traded here or if you traded here, go for scaling approach, put your SL2 here or below 28, which is the considered as a faded move, reversal move. 39, 40, 42, 42. These 5 bars are uh, good consecutive bull bars, but it is too interesting to see is that now these buyers will lose to create channel. Okay, if you want to go for continuous movement till 3 o'clock or 3:30, so you have to create channel. But here you see that this is the first leg. Now second sellers have faded it. Second leg, which is not very strong. If you see, there are 2 consecutive bear bars are there. Even also chances that if you see any bear bar, so there are chances that we will see further consecutive bars. Okay, so here are the picture of that. Itself, these 5 bars are considered as a exhausted move near the open of the day. Okay, so buyers will not very strong. Okay, so this is the H1, this is the H2. So even sellers who traded 27th bar can again go enter here if they consider very long SL and just manage their position. Okay, scaling at very low positional sizes. So entering here and go again short for 43 candle. So they exited at very good position. Okay, move your SL to here, move your SL to here. 44th bar, which is tried to break above but not able to. This bear bar could get consecutive bear bar, which is the 45 candle. 46 candle, which is breakout to the EMA. So consider as a 4 bear bar. Okay. So now one question is to arrive is here that still always in position is upside or it's now converted to downside. Okay. So one way to trade it here is that if you see carefully this EMA and price action, okay, so price tried to go above it but not able to. So after this is 47, which is the reversal bar. So many scenario are that. Okay, I will show you. Look at this. This is the bear's measured move. Okay, and got reversal up move above EMA. So one factor is that if you are getting strong bull bars, then we can enter for always in position is upside. Okay, here are the also same scenario. We will discuss that. So if you consider here after this candle, we are not getting any good looking bull bar. Okay, here is the 55 candle, which is the bull bar. Tried to break above it, and very next bar 56, we go all of these price action above it, but able to close in bear bar. So which is not very good sign. Sellers can sell it here at stop loss of above 56 candle. Okay, so this is also in this bear always in short position. First leg somewhere here and some second leg of bulls here. So 57th bar, which is closing on its low. So go for fresh position. Even sellers are enter here. If you are traded 46, you can scale in at multiple position like 50, 56 candle, 57th candle. Okay, 58, 59, 60 up to 62. These are the micro bear channel. Here notice is there is no consecutive bear bars are there. So this move is still not sufficient. So overall day is of two-sided move. Sidebars are many sidebars and overlapping bars are there. Okay. So it also faded by 63, which is the bull bar. 64 tried to go above, not get consecutive or good follow through for Buddhist bull bar and end in bear bar. 65 to 69 candle, which is the micro bear channel, closing above the EMA, immediately faded by sellers. So if you participated in this bear channel, so good entry points are 44, below 44, 46 closing, 50 closing, 57 closing, 58 closing. Even anyone traded here is 16. So what you can do, you can scale in here at 64, move your SL to here, put your SL to here. After seeing this micro bull channel, which is not very strong, not good bull bars are there, wait till EMA. So EMA H2 short, which is the 70, you can again enter here, or if you are traded here, exit here. Anyone who traded below it can get out at positive. 71, which is the always in short inside bar. So 72, which is also closing on its low, so good follow through. 72, 73, 74 are consecutive bear moves for this. So sellers gone for target of this trend line. Okay, so first push, second push and third push are there. They also managed to get measured move. Okay, so if you consider it, anyone traded 46 close, So can again go scaling below EMA because price not able to go above it. Okay. So also enter at 57, get measured move. Okay. So if you consider also it retesting of this move. So this move is retested. Okay. Break. This is considered as a breakout move. Uh, Retesting happen here. H2 again short here, and you will get measured move. So this is the breakout point, which is the midpoint. Okay, in this uh, range. Here buyers also got measured point, measured move here. They also got measured move here. This is the sidebars considered as a sidebar. So who traded here 16th bar can go again scale in 24th, 28th bar and exit somewhere around here. So there are mainly three. I can see that overall range good swings are there. So this is the first scenario. This buy channel, if you participate at any of the candle, you manage well and exit at well or top of the day. This is the always in short position. Many traders seen that this is the reversal move. So who traded 48, 49? Okay. After considering this will not be going downside. So always in position is still upside. So what they can do is after seeing 52 or even 56th bar, they have to exit at small loss or even break even position. Okay, break even to the 53rd, which is the long candle. I go for long somewhere 49th close. I assume that we will get breakout bar, bull bar above here. Uh, After seeing 52 move, I assume that this is the H1, this is the H2. So we saw some upside move. But if you see, there is no consecutive bull bars are there. So I also seen 56 bar, which is the tried to break out above it, but not able to. Selling pressure are there. So I exited below it, just here. Okay. So uh, bulls who are considering always in position now converted into short side. So these are also consecutive bear bar are there who sorted here, even here, and get measured move here. Let's go for uh, one way of trade in all this structure. So let's consider first yesterday's case. So we are going for two pattern wedge. So if you notice here, this is the micro wedge is created here. Also, if you see, this is the bull wedge, which has two pushes, H1 and H2, not able to break above here because it is not strong. So this is the bear bar. These are four consecutive bear bar. Uh, Converted many sellers into go for sell because always in position is now converted into sell side. So they created bear channel. Okay, there are multiple pushes are there. 1, 2, 3. We seen recovery. To the midday approach, we considered breakout to the EMA. So this is the breakout. So if you buy here, go for long. If you sold here to the breakout to the EMA, this is also good signal that EMA gap breakout to the EMA. Okay. So here no space for buyer. So anyone sold here, even sold here, now gets in here and exited somewhere here. Okay. If you see today's scenario, so there are many. This is the sidebars. Many sidebars are today, rather trend bars. So if you go for wedge pattern, so this is the one at wedge created here. This is flag pattern. So wedge flag pattern are there. This is the good signal for 2, 1 and 2. These bull bars are good signal for going long. Consider SL below it. Even if you participated somewhere here, go for scaling, enter again, exit anywhere here. So another wedge pattern is also here for buying side. So this buyers move exhausted. Okay, so this is the largest uh, buying bull bar. We now not see any consecutive bull bars like this. So it ended it and faded by sellers. So again go sell here if you participated in here. Okay, H2 signal. If you can also trade this last bull bar, put your limit order or SL order below it. So participate this really. Okay, this is also good signal breakout bar. I rather not take trade anywhere here because I have also many example. This is the one of the example breakout to the EMA and we got reversal. Okay, this is the sign that uh, gives breakout to the EMA. 3 or 4 consecutive bars are there, so it convinced traders that always in position is still upside. Okay, but if you see today's scenario, this 4 bar or 5 bar are looks like exhausted move near days open. So sellers are taken entry and after this H2. Okay, now let's go for small discussion of uh, all day structures like that. So after seeing this first uh, 2 days starting hours pattern, if you see that this is the first leg in this micro bull bear channel, this is the second leg. So I also assume that if we go breakout above the EMA, and then also chances of we trade above the high of the day. So that's why I reason to enter here for bull side. Okay, I also entered here, scaling somewhere here. Okay, this is the also one convincing chart that, okay, if you notice here there are 3 pushes are there, then this buying move will continue and again EMA gap up short breakout to the EMA. So also I, after seeing this move, I also consider it for always in view is short side. But here buyers able to get H1, H2 two-legged move, then this gap will be sorted by seller. Now always in position converted into sell side. This is the end of the move. Here also EMA gap sorted here. Okay, so this is the bear buying day. I gave it name bear buying day. So starting of the hours are bear and end of the move which is taken by bulls. So bear buying day. Here also EMA breakout happen. This is the sort of measure move they got. This is the long range day. Two-sided moves are there. Okay, so negativity at starting hours after wedge pattern. This is the wedge pattern. uh, they able to get 2 legs, 1 2 legs, then given breakdown to the EMA. Here one point is that there are many trend bars are there and consecutive bars are there. If you see today's chart, there is less consecutive bars are there, even overlap candles sidebars are more. So stop convincing that this will be trending day or great bull day or great bear day. It right approach. Okay. Here also from midpoint, buyers traded for first leg, second leg. Then bears took part it, first leg, second leg. Okay. So I also assume days like this. So close at somewhere around midpoint or even lower. Okay. Same scenario starting hours, uh, bear channel. Then we traded. These are the all sidebars are more less trending bars, two-sided move. Okay, so every participant will get two-legged move. In this type of day structure, is one thing is too important is to scaling. Okay, so if you scale in at right appropriate position and manage your SL well, so you can uh, get good not good, but you can at least not go in loss position. Okay, you manage to exit at break even if you are wrong, or even in profit. Okay. Okay, thank you.